Today, I want to talk about how the shorts are now facing RICO charges. The short sellers are Citadel Research, Muddy Waters, both of which who you already know, and Anson Funds, who previously shorted AMC. I also want to talk about how these shorts' illegal tricks are now also being exposed by the mainstream media. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, as this post says, Anson Funds, who shorted AMC, is now facing potential RICO charges. So the Department of Justice is getting closer to dropping the hammer on illegal insider trading, market manipulation, and naked short selling. The question, when RICO, may get answered sooner than later. So this article says that countless retail investors have lost billions of hard-earned dollars, scores of companies have been destroyed, and the capital markets have faced their biggest threat since their inception. Now, after years of waiting for the authorities to take action against Anson Funds, the biggest media institutions and the Department of Justice have finally rallied to assess the phenomenal level of damage and met out or dish out punishment. The initial investigation was rumoured to have started with the SEC, but the extent of the crime was so great that they went to the Department of Justice to switch from civil to criminal and to call upon more resources, which the Department of Justice offered. This is serious, and the head of the snake, as everyone knows, is Anson Funds. Citadel Research and Muddy Waters might be the headline names, but it's Anson Funds who we believe is the main target. You'll obviously recognise the company Citadel Research, the CEO of which, Andrew Left, is currently left living in fear of the feds. You may also remember this tweet that said the probe examining many bearish investors is said to near criminal action. This was obviously tweeted just a few weeks ago, and it seems it may not just be Citadel Research and Muddy Waters that are the main targets, but maybe Anson Funds and others. If the name Anson Funds doesn't seem too familiar to you, check out this article. This article says how one hedge fund manager is using the retail investing frenzy to turn a profit. It starts by saying that Moaz Kassam of Anson Funds has been tracking retail investing activities and their impacts on the broader market. In his Q2 2021 letter, Kassam wrote that meme stocks went to the moon, fueled by online coordination and Reddit forums like Wall Street Bets. And he also called attention to AMC Entertainment, which enjoyed a meteoric rise of about 600% in the middle of the second quarter of 2021. But he also said to recall that AMC is a highly stressed company that allows consumers to watch movies in theatres, a declining consumer behaviour like purchasing physical newspapers. But interestingly, Anson Funds has been shorting retail-followed companies like AMC and GameStop since Q2 of 2020. So therefore it's likely that Anson Funds is quite heavily underwater on their GameStop and AMC short positions and has been doing anything they can over the last few years to try and push the price down further. And it's likely this is the reason why they're being investigated not just by the SEC but by the Department of Justice and are about to face RICO charges. As this article says, these short sellers behave like a mob. They engage in wire fraud, money laundering, market manipulation, and a host of other crimes that potentially fall under RICO charges. And saying that people need to understand the Department of Justice has a 97% conviction rate, and anyone in their crosshairs isn't getting away lightly. I guess we just have to wait a few more days or weeks or months or whatever it's going to be until the Department of Justice announces which charges are being faced by which hedge fund managers. GoGavin has also tweeted these two videos of what people think hedge funds, market makers and banks do versus what they actually do. You can currently get a guaranteed free share of Tesla, a $50 cash reward and up to 15 free stocks with Moomoo when you sign up using the link in the description below. All you have to do is sign up and make a qualifying temporary deposit. Signing up to Moomoo is free, it just requires that temporary deposit, and it's a great way to help support me and to help support the channel. On top of that, Moomoo is very easy to use. They've got tons of technical indicators and even their own options trading platform.
Looks like Daryl from New Hampshire just bought $15K worth of Delta Airlines. Oopsie daisy. They actually do is this.
Bring, 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 bring.
Hi, this is JP Morgan Client Services.
Hi, could I buy $15,000 of Delta Airlines?
Yeah, sure. There's a $5 service fee.
Well, that's fine.
Okay, it's done.
Thank you.
Beep boop.
Hello?
Hey, Lehman.
Yeah?
Want to write one too many zeros on a piece of paper?
Sounds lit, bro.
So you can see that whichever way you look at it, whether these market makers are using algorithms or having secret off-record communications with other market makers to manipulate markets with one too many zeros, either way these market makers are committing massive, massive crimes. Because obviously we know they use that synthetic shorting button to create one too many zeros worth of synthetic shares. Instead of allowing a market maker to short 1 million shares which may be available, they allow them to short 10 million or 100 million or even more. All it takes for these market makers is a simple click of the button to short as many shares as they like. And we know these market makers often collude with other market makers to ensure this synthetic shorting is not discovered or is not punished. But it seems these illegal tricks are now being exposed more and more in the mainstream media. Reaper's gavel tweeted at Charles Payne saying, "Did she just say hedge funds go short in dark pools and don't need to report those trades?"
Looking at dark pools, so we know what dark pools are. They're off-exchange market, private markets, where hedge funds can go short without having to report it. He's also looking at order flow, so these commission-free type of trades actually get sold to hedge funds and other market makers. He's looking into SPACs, he's looking into cryptos. But what we do know is, first of all, does he have the finger on the pulse for the small guy? He is worth $100 million net. He also worked for Goldman Sachs. And we also know that this means more regulations. And what happens typically with more regulations is that it hurts the little guy. So we don't want to stifle that innovation. We don't mind him looking at it. But will he ultimately be the champion? That remains to be seen.
So obviously the majority of that video is talking about Gary Gensler and whether he's really doing the right thing for retail investors. But I do think she really hit the nail on the head at the start of that video, saying these hedge funds can go short in dark pools and seemingly don't have to report it. It goes to show really just how sketchy these dark pool venues actually are and how really they should not be allowed. And finally, StockSense Frank has tweeted some really interesting due diligence or a quick reminder about AMC. He started by talking about that Allegheny lawsuit, saying these plaintiffs have spent just shy of $500,000 for legal costs when they only have 879 shares, amounting to roughly $4,500. He said even if they bought at $72 per share and AMC went to zero, they would have only lost $63,000 total. So they've spent $500,000 for their mere $63,000 investment, saying there is no way they are doing this for anything related to them. Somebody else is footing that bill and using them to do their bidding. Now this could obviously be short sellers, the likes of which Anson Funds could still trying to be pushing the price of AMC downwards, but having to do it through different individuals, different companies, or through different faces to try and protect their illegal anonymity. Somebody else is using these plaintiffs to try and stop the reverse split and the conversion for their short selling benefits. And he said it's likely because of the share price paradox, saying it doesn't matter what the product is, if 3.8 million people are buying something, its value should increase accordingly. Many short sellers say that AMC is a cult. Okay, well that means there's a lot of loyal following people purchasing a good or service and loving it to the point of obsessing over it. If this was a new clothing trend, it'd skyrocket. If this was a video game, it would skyrocket as well. It's a self-fulfilling prophecy now that it should be worth more because there are people who value it deeply. Saying if millions of people purchased clothing, its popularity would skyrocket. If millions of people purchased a game, its popularity would skyrocket too. So why is the price of AMC falling when millions of investors are buying those shares? Especially as we know that we hold way more shares than those institutions do, and therefore it's not the institutions that are impacting the price. It's obviously these illegal short sellers still trying to push the price of AMC down, still trying to convince you to sell. At some point, the Department of Justice will crack down on these short sellers, and then at that point, the short sellers will not be able to hold the price of AMC down any longer, as they'll be in prison. And at that point, that is indeed when we'll see AMC squeeze. And as this guy posted, he said, "I know some of you have given up hope on the Department of Justice investigation into short sellers, but he says that he has absolutely not given up, saying that people will be put in prison, saying it's not if, but when." But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.